I'm Charlotte McLeod with the Investing News Network, and here today with me is Peter Schiff of Euro Pacific Capital. Thank you for joining me.
Thanks for having me on your program.
Yeah, that'll be good. So you'll be speaking later today about the U.S. economy and why it's not being made great again. Can you talk a little about what Trump has accomplished or not accomplished so far? What's your overall?
Well, he's accomplished blowing more air into a stock market bubble that already existed before he was elected. In fact, he rightly identified the market as a bubble as a candidate. But his policies have not, altered that. In fact, he's now championing the stock market. He's the biggest booster. He's actually claiming credit for the market rising. And I do believe that part of the fuel that has caused the bubble to get bigger is the enthusiasm that Trump will reduce taxes and that these lower taxes will mean more corporate earnings, certainly higher after-tax earnings because they cut corporate taxes, a more robust economy, more growth. And so there's a lot of optimism, but I think the optimism is misplaced because I believe the added deficits that will result from the tax cuts and the increased government spending will do more harm to the economy than whatever benefit we get from paying lower taxes.
Sure.
Because the real problem is bigger government. And paying for bigger government with deficits means more money printing, more quantitative easing. That's going to be negative for the dollar. It's going to be harmful to the underlying economy. It's actually going to make the situation for most Trump voters worse.
Right.
Maybe people in the stock market will get richer, but that's not how Trump got elected. He didn't get elected promising to make people that own stocks richer. He promised to bring prosperity to the masses, to make the lives of the middle class better, to have better jobs, better paying jobs. And nothing that he's doing is going to bring that about.
Okay, so what should he be doing? If he wants to actually make the economy great again, what should he do?
Well, we should actually be cutting the size of government. The reason the economy isn't great is because the government is great instead. So to have the economy bigger, we need to make the government smaller. So we need massive cuts across the board, including things like the Defense Department and entitlements, Social Security and Medicare. These things need to be cut. We need to have substantial reform to these programs, meaning smaller checks need to be sent out to current recipients. We need to make the federal workforce smaller. We need to reduce the number of people that are employed in the public sector so we can have better jobs in the private sector, because the public sector employees, by and large, are not productive, and in fact, they're actually interfering with productivity that might otherwise take place. And we need more regulations to be repealed, not just a few of the regulations that were put in by Obama through executive order. We need a lot more than that, and we need to get into a lot of the regulations that happened under Bush, both Bush Senior and Junior, and Clinton. The government has been growing. They've been adding to the regulatory burden for decades. We have a lot of damage that needs to be undone, and so far we're not doing it.
Okay, so you mentioned there's a bubble in the stock market that may be good for people who are already rich, not so much ordinary people. So if you're a regular person, what should you be doing right now? How do you?
Well, and first of all, too, the rising stock market may only appear to be a good thing for the people that own stocks, but what happens when the bubble pops? The Federal Reserve has inflated 3 gigantic stock market bubbles, basically, this century. The first one popped in 2001. The second one popped in 2008. Who knows when this one is going to pop?
Sure.
But this is the biggest one yet. And the prior to, the market was cut in half. And the only way the government was able to bail out investors was because the Fed inflated a bigger bubble to replace the one that just popped. Well, I think this bubble is too big to replace, right? When it pops, that's it. The Fed is out of tricks. There's not going to be a fourth one that they can inflate, because in order to do that, they would have to use so much stimulus that they would actually kill the dollar. They would end up overdosing on stimulus, and we'd have a dollar crash, and that's not going to help investors. That's going to hurt investors, but it's going to hurt the economy even more because it destroys the value of people's wages. It destroys the value of what savings they have. It destroys the values of, let's say, cash values that people might have built up in annuities, insurance policies. So a lot of people, I think, are going to be impoverished by the dollar collapse.
Okay, so lots of people here are interested in gold. How does gold fit into this picture?
Well, obviously, gold will rise in dollar terms rather substantially as the dollar loses purchasing power. You need more and more dollars to buy an ounce of gold, among other things. But I think people that own gold will be able to preserve their purchasing power. And of course, gold is not the only asset that people can own, but it's certainly one of the most reliable. And so I think today gold does not really reflect all the potential for inflation, the potential for dollar debasement. I think investors are too complacent. They're too optimistic about the future, and you can see that in the stock market, but you can also see it in the price of gold, because as stocks are going up, gold prices are not. And you look at what's happening with these tax cuts. People are interpreting that these tax cuts are going to be bearish for gold because they believe they're going to be bullish for the dollar, but they've got it backwards, because when you pay for government by creating money instead of taxing the money that already exists, if you're going to create new money in order to pay for a bigger government, that is always negative for the currency, because by definition you are creating more currency. You are paying for government with inflation. And so the way taxpayers feel the cost is, instead of the government taking away their money, the government takes away the purchasing power of their money. So they don't reduce the number of dollars they have, but they reduce what you can buy because they make prices go up.
Okay, so if you're an investor, should you buy physical gold? Should you look at gold stocks?
You should look at both. I mean, investors should look at gold stocks for sure. But there's obviously more risk there than there is in just buying bullion. Bullion is more of a way to preserve your wealth. Gold stocks can really enhance your wealth. But of course, if you buy them at the wrong time, they could diminish your wealth. But I think gold stocks are very cheap right now. And so I think as long as you can afford to take some risk and you're not going to sell them if they happen to drop, right? I think if you have a long-term time horizon, which may not be that long actually in the scheme of things, I think there's tremendous opportunities in that sector. That's why we have a gold fund, Europe Pacific Capital, and I recommend that people, rather than trying to pick the winners and losers themselves, buy a fund and let somebody else do the work for you.
Okay, and last question, you mentioned some other things in addition to gold that might be good to look at. What are some of those things?
Well, there are stocks in countries. We invest a lot of money for clients at Europe Pacific Capital in stocks in countries where I think the currencies are going to hold up better over time relative to the dollar, and where you can buy real companies at reasonable valuations, meaning get a decent dividend paid in a foreign currency, not have to pay too high a multiple relative to the earnings of the company. I mean, that's not the case in the United States. Any decent company is way overpriced. And over time, overpaying for stocks is not a good recipe for long-term investing success. Remember, when George W. Bush was elected, everybody was optimistic that the bull market that we had under Clinton would continue. But when George Bush left office 8 years after he was inaugurated, the markets were considerably lower than when he was sworn in. So you had that 8-year period where investors lost money in the market because the market was so overpriced when Bush was elected. Well, it's even more overpriced now when Trump is elected. And the underlying fundamentals for the economy are much worse. The problems that Trump inherited from Obama are much bigger than the ones that Bush inherited from Clinton. And so I think it's much more dangerous now to be in the stock market. Over time, investors are going to lose even more, but especially when you adjust those losses for inflation or measure them in terms of the price of gold, I think you're going to see a real collapse. And the stock market did very bad priced in gold under Bush. I mean, much worse than it did priced in dollars. And I think it's going to happen again, only on a bigger scale under Trump. Assuming that, well, if Trump is only there for 4 years instead of 8, but whoever follows him, especially if we end up with a hard turn to the left, and if the Trump voters are so disillusioned by promises that weren't kept, it could open the door for a candidate on the Democratic side that's even further to the left than Bernie Sanders, right? to actually win. And so the markets are now excited about lower taxes and fewer regulations. Well, if we end up with the Democrats controlling both houses of Congress and the White House in 2020, whatever tax cuts we get now are going to be more than taken away with big tax increases, and it's going to be an onslaught of new regulations. So the markets might actually get the opposite of what they're now preparing for.
Okay, well, that's all for me. Thank you so much for the insight. Once again, I'm Charlotte McLeod, and this is Peter Schiff.